What's up, guys? It's August 15th, 2025. A bit of a sell-off and then a sideways day in the markets. Trading behavior. There were some good plays alongside, but I didn't trade too much today. Trying to play it small probably for the rest of this month, and I've been saying it a lot, but I really am trying to walk in this payout. So we'll see if I can get it next week. I am close, but yeah, we had a sell-off. I like the trades. The sell-off, getting short worked in the morning. Caught this one, exited. I got trapped here. Got trapped here. I averaged down and quickly scalped out. I don't like averaging down, but thought we'd have a sell-off. We had some selling pressure yesterday. Again, I did this on NASDAQ. And then I took this trade here, but I was feeling uncomfortable in it because the averaging down kind of put a bad, just made me kind of feel awkward for the day. So luckily, I guess that feeling saved me because I scalped out and then it turned around on me. So a couple trades today and I cleared a little bit on the overnight session. So not the worst day, but I was looking at, I'll just show you guys on NASDAQ. I always do this. There was a lot of trades. Yeah, so I averaged down on this bar, or it might have been this one and got out here, I think. But it was this one because I remember being annoyed because I missed this rally. See right there. Right there. And that's the, no, I took this one. That's the one where I scalped out for right there. But yeah, so I want to give a quick shout out to the members and subscribers. I appreciate you guys tuning in. A couple of you joined the memberships. That's really cool to meet some new people. This is what I was annoyed about. I took this trade here. In my rules, I've been working on a back test getting out when an opposite signal appears. So here's, and this is the third leg. So here's the bear leg I was looking for 50% pullback. I get filled, but then this becomes an opposite signal. So the thing says to try and get out break even, and I even had time to get out break even, but I let it rally against me. So then, yeah, it rallied against me, sold off again, and then I let it rally against me a third time. So this is bad. I quickly averaged down and popped out, and that's what I was annoyed about. And then that's what I was annoyed because I was breaking my rules, and I missed this trade here. So let's say I do get stopped out, even though I have early exit rules to save me. I missed this trade here. I wasn't ready for that trade, and then I took a lousy trade here, but I did scalp out for a small profit. So, pays to follow the system. I like the system I've been building, and I just want to share that with you guys. That being greedy on one trade looking for a winner, which I could have got at break even or even for a couple points. I missed two perfectly good scalps, which would have been more than the other scalp. Anyways, I could have lost that one, made it back, and then finished the day even better. But lesson learned. It's Friday, so probably good time to take a little break. And yeah, let's do this breakdown. Bears did all right today. I'm doing a back test. Someone in the Discord asked me to talk about it. I'm going to be doing a back test of the opening range breakout. I got a lot going on right now, so I don't know when I'm going to do it. But I mismanaged it. Kind of annoying. I was trading it with options. And where is it? Oh, I did it wrong. So I was trading it with options, and I got short right around the EMA, and this is my target. Look how close we were to yesterday's low. Oh my gosh. Wait a minute, something's not right. I did something wrong. Oh, I might have done it on the Qs, but nonetheless, I get short right around here, and it goes to my 2R target. So when I trade the orb, I'm going to be going for 2-to-1, so I'll probably lose more than I win, but I'll make more money when I do win. And I didn't take profits on this bar because I thought we'd sell off a little bit more. And by the time these two, not even this bull bar printed, I went from being in profits past break even to a losing trade, and it was a small contract. And that just really annoyed me, so I held on and then got out right around here for I actually lost money even though it was better than my entry. I think it was $25. So I got to do some, the orb, I want to do back testing just to familiarize my eyes with it. It should work because it's a breakout strategy, and as long as the strategy is based around first principles, breakout or reversing, technically it will work depending on, like, if you're a 1-to-1 trader, you got to win 50% of the time, 2-to-1 at least 40 to 41%, 3-to-1 is 31%, things like that. But what I got to work out is the option pricing. I may like always pick the next day because it just annoyed me. Like, this snapped back and my entry was here, so not even past break even, because I think options price and volatility. So I went past break even into the red, and I was like, well, what the hell? So I got to work on that side of the system, because the price action without the options volatility, it did work. It would have been profitable. So yeah, I got some kinks to work out on that. Weekly chart, daily chart. Weekly chart closed bullish, but it's a small bar compared to last week's bar. But it is follow through, so that's good. That's good for the bears, at least. I mean, excuse me, that's good for the bears. That's bad for the bulls. This bar was a pullback, and then we have a rally here. Almost a 2-bar rally, but this bar doesn't go past this high until we have this week's bar. So did I say 2-bar rally? I meant to say 2-bar reversal. It ends up being a 3-bar reversal. Kind of the same, but this has a bad close. Let me see something. The high of this week was 68.50. The close of today was, wait, what was it? 68.50. And the close is 65.75. So we closed below the high of 2 weeks ago by a couple points. Is that right? 68.50. 65, 68, 65. Yeah, so we closed by just a couple points below this. So that's not the best close for the bulls. And yeah, we are getting somewhat climactic, but we're trading at new highs. So this could be nothing more than a pullback, bear trap. Bears who are trying to average in. So bears get short here, they short more here, and they never really get out of break even. When it comes close to their break even price, the screen line, it rallies. So bears were eager to get out of a bad short right around here. Daily charts on here. Let's do the exercise. So if I wanted to apply my leg 1, leg 2 entry here to get long, because that's the recent leg. Well, this is also the recent leg, but bears get short down here. They're going to short more up here, and this middle price is their break-even point. So when the market comes down here, if we're still in a bull regime, bears will buy back shorts to avoid a loss. And when they buy back shorts, bulls will buy the pullback, and front-running bulls who bought around here will want to add to their position. And that's what causes the leg 2. Problem with this is it's like 1, pullback like 2, pullback like 3. Could even say pullback like 4. So if we're in a trading range, bears could sell off. So there's, both sides there's 2 sides to every setup, I guess. I don't know what I was going with that. If there's enough momentum here, bears get short here, they short higher, they buy back here, and bulls get that leg 2. So there'd be a couple of things going on. Gap up, bar 1, big bear bar closing out slow. Bar 2 is a pullback. I almost took this trade, but I'm trying to follow the system to the best of my ability. And you can see it would have, I don't know if I actually would have got filled. Maybe on NASDAQ I would have. Why does that happen? Yeah, NASDAQ would have rallied and then sold off. So bulls that bought up here, buy more lower. Bulls that buy up here, buy more lower. And this becomes their average entry price. So when the market rallies there, they're going to get out for break even or a small profit. They're going to sell out of longs. When they sell out of longs, bears are going to short the pullback for leg 2, and they get that leg 2 fast with bar. What is that? 4. Bar 3, it's a bear bar. Follow through for bar 1's climactic, so the follow through might be more profit taking. That's what we see with bar 2. It's bull bar. But then bar 3 is a bear bar. We get a huge, nice bearish breakout bar. Ends up having a gap for pretty much the majority of the day. The gap starts like this, then it gets closed a little bit, a little bit, a little bit. And yeah, we have a gap for the rest of the day. I remember I said a while back I wanted to do it. I wanted to see if we can get a directional play. If there's a leg put in between 7 and 9 a.m. PST. And I just saw that one play out here. So there's that directional leg, still a breakout pullback. There's a lot of things I want to do, but I just keep finding newer things to do. So I gotta stay focused. I'm almost done with one back test, and I'm gonna do the next back test, and so on. I got my list right next to me. So big bear bar produces a gap. Bulls are trapped, and then again, bar 5 is bad follow through. Well, it's a big bar, so bears might be taking profits. It does have a tail, so it's a trailing range bar. And then look at the tail on bar 7. There's the hidden third leg down, leg 1, pull back leg 2, pull back leg 3. Big rally into the EMA. It's a fractal leg. And then bar 8, follow through for the bulls. So now bulls have 1, 2, 3, 4. 4 bull bars in a row, showing to get a second leg, and it's a deep pullback. They get a second leg attempt here, but then ends up selling off again. Oh yeah, I wanted to mention this because right here is when I acknowledged we were in a trading range. I was looking back, pretty annoyed at myself for averaging in. I was like, wait a minute, we were in a trading range as soon as this bar got put in. Or you could even say from yesterday we were in a trading range. So yeah, I just gotta be a little more proactive in thinking about things like that. Anyways, bar 10 sells off, closing out slow with fall through 11. Bar 12 is a pullback, and then bar 10 gets a second leg. Bulls that buy the high there, buy more at the bar 12 low. You can see the rally goes a little bit past 50% mark, and then sells off for leg 2 on 15 and 16. I got work in an hour, so I'm just going to go through this a little bit faster. It's 15 through 20. It's a bear channel, but lots of overlap. I think it's okay for bears to want to get a second leg, but I don't like how many tails there are because now we know bulls are buying lows. If your stop was there, you would get stopped out and then it would hit your target. So that stop above bar 15 is a skunk stop. Looks like 8 would be a little bit better, but that's not the best. I wouldn't take this trade because the bulls that bought the high of, I said 8, I meant to say 10. The bulls that bought the high of 10 already got out break even, so the trap, again, that's not every single bull's getting out break even, but you can't see bulls are selling, so there's not as many trap bulls. But bulls buy up here, they buy, let's see, hold on. Bulls buy here, they buy more here, 50%, sells off. So bulls are averaging in, and they're starting to make money. Look here. Bulls average in, so they buy here, get out on this line. They make low money here. And then some bulls buy this bar 12, they buy here. And then this is a tough read right now. They can buy more here on of the higher time frame support. And then the leg 2 would be here, so I mean, it could work. It could work, but I don't know if I would take that. Anyways, 20 through 22, 3-bar microchannel for the bulls, trying to get a second leg, but the context is bad, and then you can see that their EMA is acting as resistance. Bar 23, big bear bar closing on slow, and then deep pullback 24 and 25. This is where I got trapped, thinking the market was resetting. Bad follow through. I was looking like this. So yeah, I remember also moving my stop to this swing, and then I scalped out on NASDAQ. Bulls buy up here, they buy more lower. Some get out the EMA and it sells off. Some hold more and buy. Some buy here, some buy here, some buy here, and they start to make money anticipating a rally or a deep pullback. So the bears that shorted up here, short more higher, short down here, short up here, buy back. They're shorts for either a small loss, small win, or break even. You can see that the leg 2 for the bulls worked. Leg 1, why is it? Leg 1, pull back, leg 2, doesn't necessarily meet the target, but you could hold leg 1, pull back, leg 2, and that's met. Then we have bears shorting the low of 36. They're shorting here, hoping that's going to keep selling off. So I was kind of a trapped bear today, and you can see how this dynamic works, because I guess I did kind of short around the 50% mark here. I got short right around here. Market rallies. I got my break-even attempt very quickly. Exited. And then boom, look, 48, 49, 50, leg 2 for the bulls. Leg 1, pull back leg 2. Kind of interesting to be on both sides of the dynamic. Bear C 45 and think it's gonna, or excuse me, Bear C 46 think it's gonna sell off. So they get short here. Look, they see the tail on 50, they short again. They exit at break even because they're trapped 3-bar micro channel with a gap. And then the leg 2 happens again. Short here, short higher, buy back shorts, leg 1, pull back leg 2. Now we're coming into that resistance I was talking about, or that gap at least. And the rotation starts again. Bulls buy the high up here. They buy more down here. Get out, break even 56, sells off first, second leg. Leg 1, pull back leg 2. Then this entire structure can get its own second leg. Bulls buy up here. They're buying. One second. Bulls. Where is it? Bulls buy up here. They buy more down here. You see that they kind of got out of break even. 57, it sells off. Or you could go for this one. Bulls buy up here. They buy more down here. This is their break even price, and it sells off here, and their target is 66. And the pattern continues. It just continues. Look, if you missed that one, bulls see a 2-bar rally right here, hoping to at least retest the high. 59 and 60. They buy more up here. They buy more lower. Look at bar 64, right around the 50% mark, and then you get your leg 2 at 66. And then we have a big sell bar 67. Go sideways for some time, and I'm willing to bet this is around the 50% mark. 64 is the last known bull bar. Bulls buy up here, they buy more lower. 50% is their break-even price. They're selling at a longs for avoiding loss, and then bang, 77, 78, hit your target. Let's see something actually, because now there's more trap bulls. Bulls buy up here. Okay, so they need to get here to, and then a leg 2 to have enough selling pressure. The bears need the bulls to get up there. Didn't happen. So we'll see what happens on the overnight session on Sunday. Hope you guys are doing good. Hope you guys have a good, safe weekend. Yeah, I'm gonna post some membership videos tomorrow and Sunday, so stay tuned for that. And I'll talk to you guys on Monday. Yeah, you guys have a good weekend. If you learned something, share a show. Don't be a hoe. I'll talk to you later. Thank you for your time. Bye.